Alright. Oh, hello, welcome guys. Oh, a lot of you here tonight. Hello, hello. We'll begin a few seconds here. Let me make sure my audio is okay. I'm sure it should be fine, but just to make sure. Or you guys can let me know if the audio is fine, if you guys can hear me. Okay, there we go. I think we're good here. I think I hear it. Fine, everything's good. My settings are alright. Okay, there we go. Yeah, I see your guys' reactions. Awesome. Okay. Let's bring down the music a little bit more though. Alright, so I want to talk about, well, you guys can see it in the title and in the thumbnail, Amazon. Alright, so the only reason why I want to talk about Amazon from both a it'll mainly be a technical perspective, a technical analysis, but I want to give my own personal reasons as well. And those personal reasons are less, I would say, less based on information and a bit more biased since I am already long. But I think there are some very good personal reasons to be wanting to be bullish for Amazon into the end of this year and into the holiday season. And I think this could be the trade for, for the holidays and into the end of this year. And I think you guys should have it on your own watch list as well. Now, before I start here, I'm going to be talking specifically about Amazon from every single technical angle that I can show you guys, and then I also want to give you guys kind of my own outlook from a fundamental perspective as well, not just from the personal reasons too, but just from a fundamental perspective as well. Okay, so first of all, let's briefly go over some of the fundamentals here. Okay, so for this most recent earnings report, we were given an insight as to how much Amazon's profit margins have grown as well, because they had a nice little small bump in their overall net profit margin, which is now currently sitting at a little over 11%, so around 11.06%. And you guys do know how I like to look at net profit margin. Even their gross margins are a little over 50% now as well. So overall, pretty good, right? Now, here's the thing that's kind of recently hit all the overall mega cap leaders who are currently trying to stay on top of the AI revolution. CapEx, right? So their overall capital expenditures, just the amount that they're spending on AI infrastructure, for example, like Amazon, which has been pouring a lot of money into AI infra, and even today they've announced tens and billions of dollars more into building these AI infras, right? And I think it was like 50 billion for their own AI infrastructure, and another like I forgot, I think it was like 12 billion or more on specific infrastructure for their overall AWS, right? Amazon Web Services platform or something like that. I briefly saw the news, but it's something like that. So another huge amount of spending coming in for Amazon. So they're basically using their own money, and also some money that they've raised up, right? So that's kind of the overall short-term worry is what I would say there, okay, about CapEx when it comes to AI spending and AI infra spending, especially from all the other mega cap leaders like Amazon, like Oracle, Google, Meta platforms, etc., right? But down the line, I really don't think it's going to be that big of a problem, and we're most likely going to see this again. I personally think it's a short-term problem. We're going to be viewing this as a short-term problem down the line, and most people will forget about this 2 to 3 years down the line as well, as AI becomes a bit more integrated across every facet of life. And even though, again, most of these worried investors are focusing on the fact that because of the fact that we're seeing so much and higher CapEx, right? And the fact that we're not seeing immediate greater returns than what they're putting into these AI infrastructure. That, again, I think that's a very short-term mindset. Because again, it is a very short-term worry that I think it's a very, very valuable reason to be worried about. But again, I think in the longer term, with big companies like this that have a very nice cash runway business model, obviously, and growing revenues, growing earnings, right? I really don't think it's going to be that big of a problem. Again, 2 to 3 years down the line, or even 5 to 10 years down the line. So again, I know the actual worries that are here currently right now that have been affecting major mega cap tickers and leaders like Amazon here for the past 2 to 3 weeks. I know they're very valid, they're reasonable worries that you guys should also be thinking about as well. But down the line, I don't think it's going to be much of a worry, especially in the future. I think a lot of people are going to take a look back at this and say, hey, this wasn't much of a worry here. I mean, we're talking about leaders here. We're talking about these big companies that have huge revenues and earnings, some great profit margins as well, and that will most likely continue to improve, just like what we've seen with Amazon. It's most recently reported quarterly earnings, right? Like its net profit margins at 11%, a little over 11%, and its overall gross margins that's also a little over 50% as well. So again, I think Amazon, again, this entire worry about CapEx is going to be short-lived. Okay, so that's my current thoughts from a fundamental perspective as well with Amazon, and Amazon just from an overall, if you're looking at this from a PE ratio, right? Price to earnings ratio, and it's the most important, kind of the most widely used metric that people like to use. Amazon's only at, I think, like 31.5x PE ratio, okay? And I think the peer average is at 33.5x. So it's still underneath the overall peer/industry average. When you're taking a look at Amazon, if you want to determine it to be overvalued or undervalued or at value, right? And just from that PE ratio multiple, I think Amazon is still at a very good price here from today's closed share price as well. Okay, so again, I think fundamentally Amazon has a lot of room to grow. It's one of those stocks, mega cap stocks that have that will give you leeway to add over a long period of time, as long as you are focused and concentrated on having Amazon as a core long-term position in your long-term portfolios. Does that make sense, guys? I'm trying to be very careful with my words here, right? Because again, I don't want to upset anyone who are either short on Amazon or maybe who are long Amazon and are currently worried about such short-term worries that are, again, very valid and very reasonable to have as the overall AI revolution kind of cools off and has been cooling off the past, I would say the past month now, actually, not just for the past couple of weeks. Okay, so again, Amazon from a fundamental perspective, in a long-term perspective, 5 to 10 years down the line, we definitely have the market makers giving us enough leeway to slowly position into Amazon for the longer term. And share prices and share price path and trends have continued to solidify that current statement that I just made, right? That we're given this amount of room to add shares to be long in Amazon for the next 5 to 10 years. Does that make sense, guys? Let me know in the chat if that made sense. Okay, I see some reactions there in the chat. Awesome. Okay, so with that being said now, okay, a lot of analysts' price targets are currently around 300. I think the average is around 300. If I'm not mistaken, based on I think, well, well, the DCF model, right? The discounted cash flow model. It is a very reliable model to use for the longer term, for any type of long-term price targets. But again, it also depends on what type of metrics that you put in to the discounted cash flow model. So just from a broader term perspective reasons, okay, I'm gonna say that from that perspective, based on the more popular DCF models that analysts and other investors like to use, the overall fair value price target from that popular DCF model that people like to use and investors like to use alike, Amazon should be around $300. Okay, and I think from a technical perspective, it also works out as well. Okay, $300 plus. I have to add the little plus as an asterisk at the end there as well, because I think the analysts from every major institutions out there have Amazon at $300 or over that as their long-term price targets. So again, if those analyst price targets align with the overall DCF model price target, well, that'll be great. I'll be very, very happy to see that, since I am, again, already long and bullishly biased on this ticker. Okay, so with all that being said, now let's take a look at this from a technical perspective. Now let's do a nice deep dive technical analysis on Amazon. All right, so when it comes to Amazon and on the weekly time frame, let me be a bit more transparent here with you guys. So this is what I wrote on. Oh, actually, let me make sure my audio is still fine as well. Okay, perfect. So I wrote this, I think, the week after earnings week. Yeah, I think it was 2 weeks after, actually. Yeah, after this week here. So I said, this one is a no-brainer after holding its ER gap up last Friday. Well, I guess it was a week after. Yeah. So while most gap ups were being filled last Friday, this behemoth of a ticker began to form a very nice intraday range. Sure, it did move lower in the last 15 minutes, but the entirety of the day's price action clearly showed that there were still buyers at these new all-time high prices. So this gives me confidence that we can at least start to build out a pretty good flag up here, or some type of constructive consolidation phase that will send us higher into the year end. And if we were to pull back this week, I really need to see a retest around 240 to 241 being held as a major demand area of the previous all-time high area. Assume that dips will be bought on this name. Now, again, as for transparency, this was written a week after its earnings week. And guess what? In hindsight, we continued to sell off from 240 to 241 because, unfortunately, we saw the overall mega cap leaders and overall just overall market leaders that were moving off of the overall AI infrastructure and AI revolution hype and momentum began to sell off, right? And so Amazon was also obviously a part of that sell-off too, and it continued to break below 240 and 241, even though it did have a very nice retest and very nice pivot. But unfortunately, that sell-off occurred, and we continued to move lower and lower and lower, ultimately ending up with a retest right back at this weekly 50 SMA, this dark blue line here. And guess what? We just retested it back in early and mid-October, and earnings is what allowed the price to break out of and move really quickly away from this weekly 50 SMA, which is what we always want to see. So again, something that goes against my current long position is that I do not like the fact that we came back down to retest the weekly 50 SMA after just, retesting and pivoting off of it and moving very, very quickly away from it in mid-October. So to me, this is a key bearish signal that I should have been looking out for as we broke below 240 to 241. But then again, from a longer term perspective as well, there's also a very good opportunity to lap up shares for that 5 to 10 year timeline and time frame. So again, know your time frames, right? For any position that you guys want to have for the long term, right? And for a long term portfolio. So again, this is not a good look from my own personal subjective view based on my current long-term positions on Amazon and my current position as well too, short-term positions as well, which I will also give you guys at the end of the stream. So please stick around to the end. Okay, so again, I've also stated that in the description box down below. So make sure you guys are always reading the description box down below before we begin the stream here. All right, so that's the first thing that you guys should take a look at. So with that being said, I think Amazon with this retest of the daily 50 SMA, the weekly 50 SMA and a nice consecutive pivot away from it, just like what we saw back in mid-October, could be a telltale sign that we should be seeing a potential weird-looking double bottom here at this weekly 50 SMA. I mean, that's kind of what I personally want, again, since I am already bullishly biased on this name. But again, I think Amazon again has been seeing, well, the overall market makers have been trying to tell us that, hey, it's giving us some time and grace and leeway here for us to lap up some shares at a cheaper price, as long as it sticks around this weekly 50 SMA above it, right? Not below it. We do not want to see the prices below the weekly 50 SMA because that's kind of a danger area, right? But we want to make sure that we're at least staying above the weekly 50 SMA and constructively making some good sideways action before we start to move up higher. And that's exactly a great segue into what I want to talk about now, right? So after today's action, after such a good breadth expansion, and here's the thing, market breadth did expand today, but specifically only for mostly large and mega cap tech stocks. So that was very interesting to see. But it was interesting in the fact that a lot of the love came into the mega and large cap stocks, and it was kind of surprising to me by the end of this trading day. But at the same time, it wasn't that surprising to me because this is most likely buying coming from institutions who want to make sure that they're able to show their clients that they have these mega cap stocks by the year's end, right? They want to show their clients that, hey, in our portfolio, we are holding the tech stocks that are going to be most likely, that will most likely benefit, actually, not just be beneficial, but will be a huge, let me actually rephrase that. It'll be these tech stocks will be benefiting from the AI revolution, right? And they want to make sure that the clients are seeing that their money is being used in a wise way, where their money is exposed to these large and mega cap names, tech stocks specifically, tech growth stocks that are specifically getting very directly involved with the overall AI revolution and specifically the AI infrastructure and the companies that are building that AI infrastructure, like Amazon. So I think Amazon was clearly one of those stocks today, as it was up 2.53% by the end of today, right? So again, very good move today. Very good move last Friday as well. And I was actually able to grab more of Amazon last Friday, and including today as well, which I'll also bring up too, because there's also another position that I'm willing to open by the end of this week. And again, we only have basically 3 full trading days. I'm not even gonna focus on Friday because it's the early closure day. There's gonna be little to zero volume across the market. So I highly recommend you guys to not even be looking at the markets on Friday. If you want to, go ahead. But those 3 hours is not gonna be worth it for me, right? Or I guess 4 hours. Okay, three to 4 hours. All right. If you're including after hours and pre-market if you want. But again, as I was saying, Amazon was one of those great beneficiaries of today's great market breadth expansions and bounces. I guess. Not really an expansion, I guess a bounce. Solely on the mega cap and large cap tech stocks. But overall, Amazon was able to come back and on a daily time frame now, retest the daily 50 SMA. And so now we're kind of constrained between the support and resistance areas that are made and created by my respective daily 50 and daily 200 SMAs. And so that's where I want to tie in the fact that I wanted to have some very good sideways, and there's a great opportunity for Amazon to do this, right? Because it is now within the tight grasp of the support at the daily 200 SMA and the resistance at the daily 50 SMA, this dark blue line here. So these two SMAs will most likely create a very tight range in the next couple of weeks, or at the very least the next couple of days, hopefully, at the upper ranges of this very wide area between the daily 200 and the daily 50 SMA. And the reason why I am saying the upper range as well, because I want to see, and the only reason is that I want to see the price moving past this major resistance level at 228, which again, we just broke out of in mid-October. So it kind of sucks to see that the price came back down below 228 and continued to move below 228 as well. So again, if you were to tightly consolidate underneath 228 here, okay, I would really love to see a very good breakout as we head into the holiday season, especially into December and into Christmas and all the other widely worldwide celebrated holidays that are out there in December. So from a technical perspective, I really need to see some very tight consolidation. I don't even care if it's from an intraday time frame consolidation. I just want to see tight consolidation underneath 228 and eventually moving out of this 228 resistance level, which is a major resistance level that we were able to break out of immensely with immense amount of volume and great momentum. So I want that momentum and volume back once we're able to break over 228 once more. But then again, we also have this caveat, this large SMA resistance as well at the daily 50 SMA. So we have to break over the daily 50 SMA on top of the resistance level at 228. So that's a double whammy there for buyers to really try to get ahead of sellers here and try to get rid of the sellers actually and absorb them at this daily 50 SMA and the daily resistance level at 228. Does that make sense, guys? Okay, perfect. I see reactions there, guys. Awesome. Okay, so I think again, if you guys are looking to long Amazon, we have to, and if you guys want confirmation, we have to break over 228, right? And it's gonna take some time, right? I most likely for this rest of this week, we're gonna see some consolidation. But ideally, we break over 228 by the end of this week, ideally. But realistically, I would want to see some tight consolidation underneath 228 before we see a larger breakout back towards my 236 short-term target, and then eventually 242. And obviously, like I've said here in the title of this stream, 250, right? And the reason being for my 250 target is that, well, that was the new all-time high resistance level that we were able to form between these 3 weekly candlesticks that were also from the actual earnings weekly candlestick. So, you know, this 250 is a huge target here that I think we should see buyers in Amazon aspire towards as we head into the holiday season and into December, especially into Christmas, right? And I want to kind of segue into my personal reasons as well. Obviously, I am personally very bullishly biased since I do have long positions. Again, that's multiple long positions. I have a multi-layered options position. But when it comes to my personal reasons, I've been seeing a lot of people ordering off of Amazon, and off of a post that I saw from CEO Andy Jassy celebrating the fact that Amazon has had one of the cheapest product and services prices in their website compared to every other major retailer in the US. So that was kind of encouraging to see. I think I have the actual tweet here. Let me actually pull that up. I believe he tweeted this over the weekend, I think, or maybe just last week. Let's see. Let me show you guys the tweet, guys. I really want to show you guys this. Yeah, it was just on Saturday. Yeah, I was correct there. So this is what he tweeted. So it was a study from Profitero report that Amazon is America's it's actually the lowest price retailer for the 9th straight year, 14% lower on average than major retailers. So this is a great confidence booster into the, again, holiday season. And Andrew Jassy here himself personally stated this, right? So most likely we're going to be seeing a lot more people coming into Amazon and their website and their storefront here, their online storefront, to look for holiday shopping, for the holiday shopping. And even if the overall e-commerce volume is down and just the overall holiday shopping volume is down this year due to obviously the high prices, right, and people are trying to save, I think Amazon could still maintain a steady volume of holiday shopping to occur within their own website storefront, right? And I just love that this is a very good, I think, overall confidence booster for me as the reasons why I think Amazon could try to target 250 by the end of this year, and especially into maybe even slightly before the actual holiday occurs, which is, again, Christmas, right? That's kind of where everyone attributes or contributes their holiday shopping around, right? So, you know, not only just this overall holiday seasonal volume buying that I'm expecting to see, but from options volume and options call activity, right? Now we're gonna segue into potential, I'm saying potential here, I'm being careful with my words, potential positions that you guys can take as we head into the holiday season, okay, is, well, we're going to be taking a look at the options activity for Amazon, because there has been quite a lot of call activity on Amazon from the December 19th expiration, the monthly expiration, all the way up into the February monthly expiration of next year. Okay, I mean, you guys can clearly see this. All right, I mean, a heavy amount of volume in the February 20th 2026 expiration compared to the put volume here. But we'll take a look at this later. But I want to focus on the December 19th expiration first, because today we had a very large UOA and unusually options activity contract here, and that was the 260 strike call contract on the December 19th expiration date. So if you guys see it here clearly, right, the volume is at 30,671 contracts compared to the open interest, again, which is already high, of 26,821 contracts. Okay, and it seems like again, this is a very out the money contract for a very short time, right? The expiration date is not that far away already. This is like what, 3 weeks at this point? Yeah, 3 weeks. All right. And it seems like someone's trying to play very low delta, right? Very low premium value here. And I'm sure even just a double from here, maybe the premium goes up just to $1 per contract. They will most likely take more than half, or at least half, right, of today's buying. Right? I think they bought like 20,000 contracts to open, if I'm not mistaken. Let me see. Let me just make sure that the math is correct here from what I'm saying. Yeah, I think it was about 10,000, a little over 10,000, like 12,000 contracts. I think they were bought, and obviously there a lot more people started to buy off of that UOA. And we ultimately ended up with 30,671 contracts, and it seems like people are really wanting to aim for this 260 strike call. If you want to be a bit more realistic, and depending on if you guys agree with me, again, keyword agree with me, with my personal end of the year target for Amazon, which is into the 250 target, specifically 250.50, which is the current all-time high resistance level target here. That's shown here on the weekly time frame. Again, please feel free to copy my loads here, my weekly time frame chart here of my levels. Okay, you guys should just solely focus on these 4 levels: 228, 236, 242, 250.50. And if you guys do, well, you guys can have my target, my personal target of 250. And this 250 strike call contract on the expiration date of December 19th is pretty intriguing to me, right? And it's relatively cheap, I would say. Right? It's very cheap for me personally, obviously. But you know, I think this could be a very good contract to be looking at as we head into the end of this year, right? And see here, what did I just do? Oopsies. So you know, if you guys want to choose that, that's fine. But let's get into the current position that I currently hold for Amazon, and that is, okay, let me first go over it. I have multiple vertical debit spreads, right? These are multi-legged spreads, and specifically I'm currently holding a vertical debit spread using the 310 call contract that is sold to finance the buying of the 280 strike call contract, and the expiration date is September 18th, 2026. So all the up into next year. So again, I am using the 310 strike call contract. I'm selling it to finance the buying of the 280 strike call contract, and I think this is a very, very good vertical debit spread. And I only have 4 contracts open because again, this is a defined risk, defined reward spread, and I don't want to allocate too much of my money on something that is capping my reward, but at the same time it's also capping my risk. So that's fine with me. But again, if Amazon were to move in my favor, I want to make sure that I'm able to capture the most amount of profits that I can get using naked call contracts, and that leads me into my second layer here that I want to show you guys, which is using the January 16th, 2026 expiration date, and that is the 250 strike call contract. Again, I'm using this strike here because again, that is my ultimate end of the year target for Amazon, right? And this one has a lot of call activity too, and also the put activity too, but I think call activity outweighs a lot more on the January expiration date, and obviously we saw here on the February expiration date as well. This is just only a month apart here, the January and the February expiration dates, but the February is very much favoring the calls here. I mean, you guys can clearly tell from the overall volume and the overall OI, right? Open interest. So again, if you want to use February 20th for the 250 strike call contract, go right ahead. It already has a fair amount of good OI at 20,000 contracts. Okay, 20.5k contracts there. But my other layer here is the naked call contract of the 250 strike call contract on the January 16th, 2026 expiration date. Does that make sense, guys? Right, do you guys understand why I have these layers here? All right. And again, I have more risk on my vertical debit spread. I have more money on it because I have yet to see if Amazon is ready to break over 228. Again, very, very key critical level here, right? Before it decides to retest 236 and eventually 242 as we head into the end of this year. And so I have yet to decide whether or not I need to heavily increase my 250 strike call contract position. Does it make sense, guys? So again, this is all about risk and reward, right? The RR ratio here. So again, we have to be very, 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 very careful here, and we need to watch out of how Amazon decides to react off of the holiday numbers that we'll be most likely getting, and the overall holiday spending that consumers will be spending the data, right? We'll be getting from, well, if we do get the data from the government as well. As you already know, the last, I would say 2 months has been absolutely chaotic with numbers not coming out for inflation and jobs. It's just overall, you guys should know this already by now, but it's just been horrendous, right? So again, these are the two positions that I want to tell you guys. I'll be maybe giving you guys more of my other vertical debit spread positions that I have already. Again, I have multiple layers here using vertical debit spreads like I just told you guys a couple minutes ago, and I think yeah, maybe I will divulge more into the other vertical debit spreads by maybe this year, maybe next week, next week. Okay, but again, overall, very, very good position that I have personally. I think I am well exposed to Amazon. Well, not fully exposed yet, I think, because I really want to add on to more of that 250 strike call contract on the January 16th, 2026 expiration date, right? Maybe if we decide to move more, if we decide to move sideways underneath 228, maybe I can even just move down to the 240 strike call contract to make sure I can have a higher delta position, right? We like to have higher delta positions as well, especially if we do see this type of sideways action underneath 228 go a little bit longer into next week. But again, ideally we decide to break over 228 this week. By the end of this week, I really hope to see that, and maybe even possibly even more ideal will be if we decide to have a nice V-shaped recovery. Right? That might be asking a little bit too much, but if you were to have a V-shaped recovery, I mean, this would be absolutely nice, right? As we head into the holiday season, maybe into the end of this year, right? Again, well, not just maybe, hopefully, by the end of this year we hit 250, since that is my ideal personal target for Amazon, right? Just like I've said in the title and in the description box below. Does that make sense, guys? Okay. Alright, well, that is it for tonight, guys. I really want to just go over Amazon here and give you guys kind of my insight. And again, I think Amazon just really needs to constrict very tightly on this 228 level and be able to break over my major SMAs on every higher time frame charts, right? Again, for example, on the high time frame chart of the weekly time frame here, it has to break over my weekly 10 and 21 SMAs again, and on the daily it has to break over the daily 50 SMA again. Right, along with the major resistance level of 228. Again, it's going to require a lot of bullish momentum and bullish volume for it to break over 228. And if you're able to do that this week, I'll be very, 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 very happy to see that. Okay? All right. Hopefully this video was this live stream, and hopefully if you guys are watching this after the stream is done, hopefully this replay video has been helpful, and hopefully you guys are able to get a good insight into Amazon with this live stream, and hopefully I can give you guys a nice idea as to what you guys want to do with Amazon for your long-term portfolios in the next 5 to 10 years. Okay, and again, if all this was very much applicable to your own trading, make sure you guys hit that like button down below. It really helps out with the YouTube algorithm. It really pushes out my content to all the people out there who are not subscribers to this channel, and it will expose more people to what we do here at Charts Focus 1, and especially will give more light into the CFO Springer Watch report, my flagship product here that I give to everyone, that I send out every single Sunday night, right? Again, I'm not going to get into much of the report here because I talk about it every single live stream, every single video that I upload on this channel. So if you guys want to know what it is, either DM me on Instagram at ChartsFocus1, or just simply watch any other video that I have on this channel. Okay? All right. Again, hopefully this is a very insightful and applicable live stream. I will see you guys on Wednesday night at the same time, maybe a little bit earlier like tonight at 7:30 p.m. Pacific Standard Time, or 10:30 p.m. Eastern Standard Time. Good luck tomorrow and have a great rest of your night.